Well, I'll go ahead and get started. We are recording this, we've had some people that say I can't make this time, but I'll look at it later. So today, we're just going to go through an introduction on the PPP guidance. It's amazing that we're back at this again. I think a lot of us thought last year when we started doing these that things might be back to normal fairly quickly, and sadly we see another wave and more difficulties in the country. Obviously, in fact, Mary and I had the opportunity to take a quick, brief cruise before tax season last year, and I remember this was just sort of starting to break. And so they said, "Hey, don't worry, we're going to have extra safety protocols." And so that was when we walked out there. They handed you a piece of paper that said, "Have you traveled to China in the last 14 days?" And so we would check. Everybody checked no, and that was this. We've gone a little further than that in the last year, almost. Uh, so let me advance the slide here. As you know, there was a bill that was signed late at the end of 2020. And some of the main points here were $600 stimulus checks sent out to individuals. And looking at the 2020 tax prep program, it is going to work so that if people didn't get their stimulus or they got too much for some reason or the other, it's kind of worked into the filing of the tax return. And those have already gone out, most of them, I think. If you haven't received one, there are ways to check. It extended unemployment through basically almost the end of March. What was the family leave and the COVID sick pay was supposed to end at the end of the year. That's extended for this first quarter. And again, they reopened the PPP loans. There was quite a bit of money left over. It was a very popular program. If you remember, first they ran out of money quickly, put more into it, and then the program ended before they used it all. So they've reopened so you can still get around one PPP loan if you didn't get one. But now, of course, they're talking about PPP2 coming back and being able to qualify for more. Well, it was really important, and we'll talk about that more in just a second. What was really important was to finally get guidance that the expenses covered by these loans could be deductible. Before, the way they worded it is, okay, the loan is going to be forgiven and that's not taxable, but you can't deduct the expenses tied to it. So in essence, it's basically saying this is taxable. So this act made it very clear this is not taxable. This is, if you get it forgiven, it's like a grant. The EIDL grant does not have to be paid back. Now, some of you may have gotten forgiveness back from your bank that subtracted the amount of that original EIDL loan, and that will be changed. It'll be fixed. So don't worry about that. In fact, AJ, I think, has talked to a couple of bankers that said it's just going to be a matter of time. The SBA will fund us, and we'll let you know that the whole thing's forgiven. So don't be concerned about that. That'll happen who knows when. There is supposed to be, even though they've made some easy forms, especially for, I think there's an S form in applying for forgiveness if the loan's under 50,000. And it basically just says very simple things, you send it in. That's expanded now to loans under 150,000. And I believe that the SBA had 26 days, 28 days after the passage of the bill to produce that form. It'll be out the end of this month. And it basically means you don't have to send in any backup if your loan is under 150,000. You should keep that backup for up to 4 years to be able to prove you use the money as you should. And then they enhanced this employee retention tax credit. Prior to this act, it was basically either you get a PPP loan or you get this tax credit. And we'll talk about that a little bit more in the future. But now they made it to where that they aren't mutually exclusive. You could get a PPP loan and take this credit under certain circumstances. So again, be chatting in your questions or whatever. We'll get to those pretty quickly. Okay, the general rules for receiving a second draw PPP loan are that you received a first draw loan. You use the proceeds per the rules, and that basically meant that 60% of those proceeds were used for payroll costs, and then you were allowed, utilities, mortgage interest, certain other expenses, and of course, group health insurance, some of those things, some payroll taxes, basically state payroll taxes. And if you used it properly for those things, then you can apply for a new loan. Now, the banks are basically saying you need to go ahead and apply for forgiveness, even though the rules, the SBA frequently asked questions don't say that. How else is the bank going to know that you used it? So they're basically saying, if you want round two, make sure you have your application for forgiveness in for round one. We filed a number of those. I think we're waiting to hear from banks on a lot of them. But if you need help with that, let us know. We are doing that. Now, you have to have a 25% reduction in sales comparing a quarter or the year of 2020 to 2019. And I'm going to go into that in a little more detail in just a second. Another thing that's nice is you can use either 2019 or 2020 numbers for the loan amount. And we've done the math for some folks, and the 2020 payroll numbers may be slightly higher. It's still basically payroll costs for a year, limit to 100,000 per employee. And if you know, that's annualized. So if a person, you know, makes 50,000 a month and only work for 3 months, it's still it's annualized. And the thing is, if you've already turned in your 2019 numbers, you don't have to supply more backup. So in some cases, the numbers are fairly close. And even though 2020 might be slightly higher, it probably wasn't worth the hassle to have to put everything in there. And so we're kind of recommending just put in the application and let it rip, because the banks already have your 2019 numbers. And so that makes it easier for everybody to process quickly. So those are some general things. Again, it's taking that annual payroll number limited to 100,000 and dividing it by 12, multiplying it by 2.5. That's the amount of PPP loan you can get. We've got some, and maybe I'll share real quickly here, some forms we've come up with, and these are actually up on our website. I could bring our website up, but if you go to our website, there's a COVID relief page, and that has these forms. But you should be able to see this form here. We've come up with a template where you basically just insert your sales by quarter for 19 and for 20, and it'll show you if you qualify, one quarter being 25% down. And there are some more details. We've got another spreadsheet that shows if you're a business, how much can you qualify for? Basically takes your gross payroll costs, subtracts any amounts that are over 100,000, and multiply that times, divide that by 12, multiply it times 2.5 times, and that gets your payroll. Now, there are different calculations for partnerships, and they really tightened up the rules here a bit. Partnerships were kind of a mess last year, and they came out with additional guidance. You can add in your payroll costs for your employees, but then for partners, ships apply, not the partners themselves, even though they're treated kind of as self-employed. And it's a self-employment income that you would add in per a K-1. And this is problematic for people who are limited partners, or maybe those who received guaranteed income, but the partnership itself showed a loss. Then you have to subtract Section 179 deductions for equipment purchases, depletion against royalties, and unreimbursed partnership expenses. You multiply that number times 0.9235. I know you're all memorizing this, and you get to add that in with other payroll costs, limited by 100,000 per partner. Multiply, you have your annual number, divide by 12, multiply times 2.5 months. Sole proprietors, and we have a spreadsheet for this. And again, we're doing these for our clients. And if you need help with this, if you're listening, and we're helping everybody run these numbers. It's the same thing, add your employee payroll costs, but then you can take your Schedule C net profit limited to $100,000. You add that in, and that's, you again, divide by 12, multiply times 2.5. And so if you're a contractor or sole proprietor, you have a Schedule C business, if you have an LLC that's a disregarded entity, you file a Schedule C on your personal tax return. This is how you get to the amount of loan you can apply for. So these rules are fairly similar to how they were before. Let me go back to the PowerPoint here. No, that's not the right one. Let's see. There we go. Okay. I wanted to talk a little bit about this revenue reduction because a lot of people have questions about this, especially if you weren't in business for all of 2019. Basically the rules are you had to be in business in operations on February 15, 2020, right? That was the magic deal. And if you were, then you began to qualify for this. Now, if you were in business for all of 2019, you have two options. One is that spreadsheet I showed you where it's a quarter by quarter, quarter one 2020 compared to quarter one 2019, et cetera, et cetera. One of those quarters, just one of them has to be down by 25%. Or you have the option of looking at the whole year. If the whole year of 2020 is 25% down from the year of 2019, you can use that to qualify for this round two funding. If you'd use the annual thing, you've got to go ahead and complete your tax return for 2020 and get it in to the bank. Now, if you're not in business until the third quarter of 2019, let's say you started operations in the third quarter, then any quarter in 2020 must be 25% lower than either the third or fourth quarter. Same thing if you got into business late in 2019. Any 2020 quarter must be at least 25% lower than the fourth quarter of 2019. And again, if you're not in business in 2019, but you're in business on February 15th, 2020, either the second, third, or fourth quarters of 2020, look, I don't make up these rules. I don't write them. Don't get mad at me. But either the second, third, or fourth quarters of 2020 must be at least 25% lower than the first quarter of 2020. So it's a little complicated, but these are the ways that you can see if you qualify for this second round funding. So it's really important to do this math and see that everybody can, because in essence, this becomes a tax-free grant, a gift from the government to help with operations. So again, you have to use it even now. If you get a second round, you have to use it for payroll costs to be forgiven, 60% of it. And they've added other costs, 40% can be for utilities, mortgage interest, some supplies, if you had stuff destroyed in a riot, et cetera, et cetera. So now, again, I'm kind of going through all this quickly. We've been posting about this. We'll continue to post about it. We're putting more and more things on our website. There is a new EIDL grant. If you remember what happened with these grants, first it came out, hey, everybody's getting $10,000. It's going to be a grant against this loan. So everybody's like, yes, and they applied. Then they changed their mind and they said, oh, we're going to make it $1,000 per employee. So smaller businesses suddenly that thought they might get a $10,000 boost got $3,000, or sole proprietors got $1,000. Well, they're going to open this back up and make it available for you to get up to that $10,000, but you must be in a low-income community, and that's based on census numbers. And the SBA hasn't come out with it. You're probably just going to have to do a search to see where your business is. And it may qualify and it may not.
There's a really good calculator on the nfib.com.
Yeah, I think they'll put a calculator probably.
Yeah,
we can link to that.
Yeah, we'll send it.
Because it's not even open from the SBA. I just want people to be aware of this. This is a potential benefit. Not more than 300 employees. I mean, that's probably not a problem. And gross income during any 8-week period between March 2, 2020 and 12/17/21 declined by 30% compared to the same period a year earlier. So you got to kind of do the math, and who knows how the SBA is going to police this or whatever. But you have an 8-week period where you had a 30% decline in sales. So there's some bean counting to do, and again, we can help with that. I just want people to be aware of this. And the application's not available. If you go to the SBA website, they say these aren't there, but anyway. Okay, now I wanted to talk very briefly on this employee retention tax credit because most of us ignored this. Most everybody went for the PPP loans, and you knew you didn't have the availability to get this credit. It is expanded now that if you got a PPP loan, you can still get this credit as long as you don't double dip. You can't use the same wages that you used for forgiveness of your PPP loan to get this credit. But beyond that, it's actually expanded into 2021. So here's how it goes. It's for qualified wages. And of course, there's some rules there, but still most wages from 3/12/20 to 7/1/21. The credit is 50% of wages in 2020 and 70% of wages in 2021. And that's a maximum of 5,000 per employee in 2020 and 7,000 per employee per quarter in 2021. So it's conceivable you could actually get a $14,000 credit for paying an employee in 2021. Now you must be fully or partially shut down due to an order, coronavirus order, or 2020 sales are down 50% for a quarter, or so you would compare a quarter in 2020 against a quarter in 2019. And if your sales are down 50%, you can qualify for this credit. Or in 2021, they've made it more generous if your sales are down 20% compared to a 2019 quarter. So again, there's math to be done here, but there is money. This is claimed on 941s with your payroll tax reporting. And it's clear you're going to be able to go back and amend prior 941s to claim this credit. The IRS is still bringing guidance out on this. So this is kind of an overview just to make everybody be aware of some of the benefits available in a broad sense through this latest tax act. So now let's see, do we have any questions? I got a question from the peanut gallery here at the office. Well, okay, listen, if we don't have any more questions, we'll go ahead and close this. I don't want to waste everybody's time. Please reach out to us. Again, we're working to process these where we know actually which banks get these done pretty quickly. We have some good contacts with banks, even if you don't bank there. So we're able to get these applications in quickly. And so let us know if we can help. Anyway, that's that. This is so scintillating. I appreciate you guys taking time.